Good afternoon, ladies and gentlemen, and welcome to Money Talks Media. I'm your host, John Klotz. Welcome to our bi-weekly segment dedicated to growing your money in and around the GTA. And we have a serious roster of speakers, including portfolio managers, money managers, hedge fund managers, tax accountants, CRA experts, estate planning professionals, you name it, we got it, all here on Money Talks Media. Money Talks Media is proudly based on the public speaking series Toronto Talks, now in our 9th year as a public speaking venue. And we encourage you to attend our monthly event. Our next event is taking place on Tuesday, June 28th. And it features Irene Becker, who's a coach, who's going to show you how to take your business to the next level. So if any of you entrepreneurs or consultants are out there listening to the show, feel free to attend. Typically, we charge $20, but if you're a listener or watcher of this show, you can attend free of charge. So you can check that out at torontotalks.org. Money Talks Media is proudly sponsored by Northwood Mortgage Life and Investment Planning Council of Canada. And you can request our newsletter at Northwood Mortgage Life, and we have got some great tips on how to reduce your taxes, how to take years off the life of your mortgage. Just go to northwoodmortgagelife.com and request our tax secrets. Also, big topic about Insurance Day. Not sure if you can see, but I've done something to myself. I actually broke my collarbone biking with my kids. And I got to tell you, as I was hitting the floor, ladies and gentlemen, I was biking, wasn't doing anything all that silly, just out for a bike ride with my kids. As I hit the floor, two thoughts came across my mind. The first one was, this is going to hurt. And secondly, do I have enough coverage? And it really hit me as I hit the ground that fortunately I do have enough coverage, and I encourage you to have that discussion with yourself, because the worst time to have it is when you have an accident. So just food for thought. If you missed any of our prior shows, by the way, you can check those out at moneytalksmedia.com. That's Money Talks Media. And we have about 70 shows all on ice just for your viewing pleasure. As well, during the show, if you'd like to call in and receive some information, you can call us at 416-204-9723. You can also call our office at Northwood Mortgage Life to obtain your tax secrets at 416-969-8130, and that's extension 230. And now, on with the show. Today, Money Talks Media talks emerging markets with our good friend Paul Mesburis. I hope I said that right, Paul.
Yes, you did.
Thank you. And you are the Senior Portfolio Manager for Excel Investment Council.
Yes, I am.
Fair enough.
Thanks for having me today.
Well, it's great. You know, we've had Brad Hughes out before, and we've had some great discussions about emerging markets, and one of the things is just the complete mystery that exists over there. So thank you for coming out. And in fact, you're the guy, though, who actually picks the stocks.
That's right.
So we really wanted you to come out so we could hear just from the horse's mouth what's going on, how these stocks are being picked, and the direction clients should be going in with respect to emerging markets. So go ahead, the floor is yours.
Well, emerging markets are a very simple story. These markets have done quite well over the last decade. We've had the equity market cap in these markets grow from $2 trillion to $14 trillion. And there's really three themes that have taken hold and that are continuing to drive the growth in emerging markets. One is you have urbanization, where you have people migrating from the rural communities to the urban communities. As part of that, consumption changes. People are buying, their first condo for the first time, their first car for the first time.
These are, now maybe you could just define emerging markets. What markets are you talking about?
That's a great question. There's a number of various definitions. There isn't a hard definition for emerging markets, but the World Bank has come out with one that I think holds true. And it's basically a market that has a per capita GDP income of between $2,000 and $12,000 per person. And when you use that sort of definition, you've probably got about 50 countries.
So these are countries basically that technically would be not wealthy compared to North American standards. And and some examples of that would be
countries like China and India, Brazil and Russia. Those are some of the larger emerging markets.
So these people now in these countries are doing things like what we're all doing here. They're getting condos and
That's
cars and mortgages and all that sort of
That's
stuff.
right.
Is that right? Okay.
They're buying their first TV set. Meanwhile, you and I probably have 3 or 4 TV sets at home. They're buying their first washer and dryer. So those basic industries that we take for granted are growth industries in those emerging markets.
Because I know when Brad was on, we talked about, one of the things we talked about was that there was a company out there that was offering washing machines in China. And here, washing machines, everything's on sale. There, they just had to put up a sign saying washing machines here, and there was a lineup at the door. Is that sort of some of the phenomenons you're talking about?
Exactly.
Okay. Now, tell me something. Maybe you could give us an overview. I'd like maybe this to be in kind of 2 parts, but I want to go in the direction you want to go in. Maybe an overview of kind of the market, where things are going, possibly why emerging markets you think are the place to be, and then maybe in the second part we could drill down. You could talk about some of the companies you invest in.
Sure.
So go ahead.
So in terms of the big themes, I touched on urbanization. The other one is demographics. A number of these countries have young populations which are just coming into the workforce. For example, in India and in Brazil, the average age is under 30 years old. So you have a number of people coming into the workforce for the first time. And then the other big theme is infrastructure. A lot of these economies need significantly more infrastructure in order to build out for that growth. And you've got places like Brazil, for example, that will be hosting both a World Cup and a Summer Olympic over the next few years.
Yeah.
And they're expected to spend about $900 billion on improving their infrastructure over the next few years.
When you say infrastructure, are you referring to highways and what sort of infrastructure projects are there that are of interest to?
Highways, ports, terminals, airports, for example.
Okay, and where are in terms of these markets, which are some of the hotter ones? Which are the ones that you've really got your eye on? I mean, we're familiar obviously with the BRIC countries, Brazil, Russia, India, and China. Where do you see sort of the real opportunities taking place specifically?
Well, those are the 4 larger BRIC markets. So we obviously spend a lot of time looking at those markets. Some of the other smaller markets that we also believe have some very good growth profiles include Thailand and Indonesia, South Korea as well, and Taiwan.
So where would you like to start this discussion? Where's the thrust of the interest of Excel right now? Where are they focusing their energies?
Well, the main focus is on the 4 BRIC markets,
okay.
and then recently we've launched a couple of new funds. One of them is a broad-based emerging market fund that has a go anywhere mandate, and the other fund for people that want to be outside of equities are emerging market bonds. We've also launched a broad-based emerging market bond fund.
Right. That's interesting. Okay, so let's talk about the BRICS. Go ahead. What's going on there that's of interest, and what are some of the interesting stories going on?
Well, from a big picture perspective, we've got very good growth coming out of both China and India. China is probably going to grow at about 8.5% in terms of their GDP growth. We have India is probably going to come in at closer to 8%. So what we're seeing right now is the emerging markets in the world are really driving the economic growth. Overall, emerging markets are probably going to do about 6.5 to 7% growth. And then we have got the developed markets growing at closer to 2 to 2.5%. So we really have a 2-speed recovery coming out of the recession. And what's interesting to note is that these emerging markets didn't actually go through a recession back in 2008. They simply slowed down because of the liquidity crisis that occurred in, essentially out of North America.
Now, our economies are extremely dependent on theirs. I mean, especially the Canadian economy. By investing in Canadian resources, you're practically investing in emerging markets to a large extent. What are your thoughts on that?
That's true. That's true. A number of, if you look at Canada, really, what is the Canadian equity market? It's banks, mining companies, and energy companies. Those are the 3 big sectors.
Right.
And with the mining sectors, they're really geared towards the growth in emerging markets. But what you don't get by buying the large cap mining stocks here in Canada is you don't get access to the emerging market consumer. So you're not able to buy that local Indian bank that's growing at 25% revenue and earnings growth. You're not able to buy the local TV company that's selling the Best Buy of China that's out there.
So in terms of of growth, you obviously, you allude to the fact that their economies are growing faster than the North American economies. So why wouldn't one put all their eggs into the emerging markets? What would stop you from doing that? Or maybe you've done that already.
Well, what we tell people is it's important for them to talk to their financial advisor and develop a financial plan that makes sense for their stage of their life. In terms of equities, we would tell people to focus their equity portfolios on the emerging markets. Right now, if we look at emerging markets in terms of the global equity markets, they represent about 14% of the global equity markets. They've grown sevenfold over the last 10 years. Meanwhile, the developed markets are basically flat over the last 10 years.
Right, they are, that's right.
Where are they going to be in 20 years? Well, that's a great question. I was reading a report recently by Goldman Sachs, and they estimate that the emerging markets will grow sixfold over the next 20 years. Meanwhile, the developed markets will double, a little bit more than double.
Right, but there's more volatility. That's one of the issues, is it not? Or what are your thoughts on that?
Well, the volatility is higher, but the returns are higher as well.
Right.
And that's been proven over the last 10 years.
How do you feel about the U.S. economy right now?
That's a great question. One of the comments that we were getting last year was, is the U.S. going to go back into a recession? Are we going to have a double dip? And I think given the positive gradual changes that we're seeing in the U.S., that double dip is off the table. The U.S. economy is probably going to grow at about 2.5% this year. And we're slowly starting to see job growth, but it's very sluggish. And where we are in the cycle right now is we've had the profit recovery on corporate balance sheets, and right now we're at the capex where companies start to expand their capital expenditures. Right. And once that happens, then we start to see job growth. So job growth is the last part of a recovery from a recession. So that's why we have not seen that yet.
Yeah, okay. And what sort of returns would you expect from the U.S. over the next 3 to 5 years in their equity markets? What projections have you guys set?
I don't look at the U.S. market that closely, so I don't have a formal sort of forecast for that market.
Okay. What about Europe? How do you feel about that? I mean, and that includes some emerging markets, obviously, as well. There's the developed portion of Europe and the pigs, as we say.
That's right. Yeah. Well, yeah, and the pigs are actually part of the developed market.
Right.
So Portugal and Spain and Greece, for that matter, they're actually part of the developed market. So, Greece in particular, which is getting a lot of airplay in the press, obviously needs to restructure. Whether it's a soft or a hard restructure remains to be seen. I believe that there is a way to restructure the debt. Part of it will involve extending the maturities, and the other part will actually be focusing on the fiscal situation in Greece. And one of their issues is that they don't have a proper tax collection system.
Right.
So you have a lot of wealthy people that are, that have good jobs but aren't really paying income tax. So they need to reform that income tax collection system. And they also probably have a bloated government population in terms of people working for the government. It's probably about 12% of the population works for the government, and a lot of the other economies in Europe, it's closer to 6%. So you can kind of see that it's a little bloated in that regard.
Okay. So we're going to take a quick break. I know that if you had your druthers, we just talk about emerging markets. That's what we're going to do. We'll be back. Money Talks Media is talking with Paul Mesburis. He is the Chief Senior Portfolio Manager for Excel Group of Funds. We'll be back in 1 minute.